All right, we got reason number 2. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, bringing you the next in the video series that I've created to talk about the top 10 reasons why we will have another housing crash and crisis. Yes, we most likely will have some form of something in the future. The market is unsustainable and cannot go on the way it's trajectorying right now. So if you want to recap what we talked about before, number 10 was banks, lenders, and servicers preparing for the onslaught. 9, the mortgage debt relief back in a different form. 8, investors, both domestic and foreign, leaving the marketplace. 7, the current housing narrative and how we're being tricked, and also government, increased involvement in real estate. Number 6 was home price appreciation. Number 5 was the volume of delinquencies, forbearances, and foreclosures going on. Number 4 was data providers and other people discussing the future foreclosure volume. And number 3 is Wall Street waiting for this to happen because there's so much dry powder and billions of dollars that have been raised waiting to deploy. And guess what? They're not going to deploy it at the top of the market, the peak of the market. They're going to wait till things change and there are deals. That's when they spend their money. So they're waiting for it. We know it's going to happen. They're waiting for it to happen. It's almost like it's been preordained, and it's just a matter of we just got to work through the motions here. So reason number 2 is major warnings being issued by who? 1, by the CFPB. 2, by the Florida Supreme Court. I've talked about this a little bit in previous videos, but I do think this warrants itself to be number 2 on my top 10 reason list. And again, they issued major warnings for the future. There's 2 interesting statements over the past couple of months issued by the CFPB, which is the Consumer Finance Protection Bureau, and the Florida Supreme Court. So let's take a look at the CFPB. So the CFPB issues warnings to servicers, which basically can be banks, lenders, non-bank servicing companies, people who are servicing a mortgage for a homeowner. They're basically saying be prepared to handle the volume, okay? Especially after the forbearance programs expire. If you recall, the forbearance programs were all destined to expire on the 31st of March. They got some life up until June 30th, and after June 30th, there's expectation that there's a bunch of programs that are going to expire, and I think some will also expire towards the end of September. So the volume is predicted to be large. Now, I look at this and going, how else can we interpret this? If the CFPB is coming out telling bank servicers, etc., saying, be prepared, there's going to be stuff happening here. We don't want to have a repeat of the last housing crisis, all the issues that happened. How else can we interpret this? That there's a small percentage of people that are going to need help? No, they're suggesting a large amount of people are going to need a lot of help, which really is debunking the current housing narrative that the people who are in forbearance are simply going to move merrily along and come out of it clean once their programs are over, and or resume paying their mortgage. They're going to easily get loan modifications, or they're going to sell their house. They're going to pay off their debts, and off to the races they go. So that's the housing narrative. The CFPB is saying prepare, which really to me would be a it's a complete 180 compared to what the current narrative. So they know something that the mainstream media through the housing narrative is not telling us. That's how I would interpret this, right? So example, we take a look at this article that came out, and I've tracked this for quite some time now. It is a known unknown. Industry specialists have been anticipating for some time now that the current high rate of forbearance plans could prove problematic down the road. I want to make a point here, and I've made this a number of times. The industry and the housing narrative just seems to really be focused on forbearance. So people in forbearance as kind of like the only group we talk about with respect to what's going to happen, with the future issues down the road with real estate. So we're looking at this volume, and everything is being calculated based on that volume of forbearance. No one's talking about that 1.8 million or so delinquent borrowers who are not on any forbearance plan. No one's talking about the 19 million plus units that are owned by mom and pop small landlords that don't get any forbearance protection or can't get their hands on any rental care money, stuff like that. So we're not even in that scope. That's why when the CFPB is just focusing on the forbearance, and realize that forbearance is a extrapolated number based on samples. So we know it's going to be more. That's number 1. And 2, the stuff they're not considering. So that's why the CFPB is coming out and saying, hey guys, be prepared because there's going to be an onslaught of stuff here, and we don't want to have repeats of what happened in the last housing crisis. So that's kind of important here. So, and look at the statement here where my red arrow is. It says there is a tidal wave of distressed homeowners who will need help from their mortgage servicers in the coming months. responsible servicers should be preparing now. There's no time to waste and no excuse for inaction. No one should be surprised by what is coming. Okay, so here's someone's just kind of calling it like it is, going, we know what's going to happen. We've seen it before. We've been through this before. Like, what are you doing about it? Okay, let's figure this stuff out right now. So really, the CFPB wants to make sure that homeowners are taken care of. What I mean by that is they're being serviced. And service meaning what? It's the fact that, the mortgage companies, the banks, lenders, servicing companies can help them, service them, and engage them. And that's what didn't happen before. There are so many horror stories of what happened back in the day. Because I've heard all this with all the stuff that we did back in the day with short sales and foreclosures and stuff, that so many people tried to do loan modifications and save their homes, and they just couldn't get it done. Why? Not because of their effort. It's the lack of response, lack of government programs at the time, lack of staffing, lack of quality staff, lack of accessibility from the banks and lenders. So people lost their homes that shouldn't have lost their homes just because the lenders couldn't take care of them. Simple as that. So if you take a look at, again, and there's all these articles coming out now about how the CFP is sort of managing or taking, gauging the situation out here. Well, more borrowers are behind their mortgage than at any time since the height of the Great Recession. All right. And, communities of color have been hit hard by the pandemic, and the latest data showed that many borrowers are still hurting. The CFPB will continue to seek and actively respond to developments in the market, doing everything in our power to help families stay in their homes. As we warned mortgage servicers last month, unprepared is unacceptable. So, again, they're just reiterating the obvious, going, we need to make sure that we can service people. There's a volume here. And I know that when you start looking at some of the information, the amount of calls that are coming in to the lenders are increasing, and I guess you could say that the amount of complaints or unhappy, I guess you say borrowers, that's rising. That volume is rising now because they're not getting through, or they're not being serviced, or for whatever reason. But the dissatisfaction with homeowners and borrowers contacting their mortgage companies has been increasing, pretty much every month on a going forward basis here. So. But I guess the point here, which is positive, is expect the best and prepare for the worst. That's what we should all be looking at here, right? So realize that, and they're saying here that the financial crisis, wasn't like this, didn't have Fannie Mae or Freddie Mac, FHA and VA, everyone, including Congress, mandating forbearance for borrowers who are struggling, okay? But, again, going back to the latest, when this was, when this number was, article came out, the active forbearance from Black Knight showed 2.18 million homeowners in forbearance, with June expiration numbers at about 830,000. So that's a huge number. Basically says still those numbers mean millions of borrowers will require assistance from default serving professionals. And again, going back to the fact that the CFPB has been pretty clear that servicers need to be very ready with things. And these are not quick phone calls. Exactly. You don't just go on and click a button on a website or talk through an automated, I guess you could say, voicemail tree, etc. UAC auto attendant tree. You need to talk to somebody at the lender, the servicing company. So these are not quick phone calls. You need people that are trained and that can actually help you. And that was part of the problem back in the day, is that they weren't staffed. And the people that were staffed were reading off scripts. They didn't know what to do. And stuff, they're just getting paid an hourly rate. And whether you got serviced or you got your property taken care of, your mortgage taken care of, who the heck knows, right? And nobody seemed to care. So we had a lot of carnage that went on. So please realize that, this, I think, is a telling situation where, a group like the CFPB has to come out and say, prepare, prepare, prepare. And again, with these numbers, these are just the extrapolated sample numbers. So we all know that, the 2.18 million is more, and we all know that the 830,000 will be more as well too. So, but they say the numbers and they say millions of people. You see, so it's kind of give and take there. So ultimately, in the end, they know there's more than what's being stated out there. But I want to remind you guys, if you're not already subscribed to my channel, if you could help my channel grow and hit that subscribe button, I'd really appreciate that. And secondly, if you are a subscriber or think you're a subscriber, please hit the subscribe button again, because I've been losing subscribers for some unknown reasons on this medium. So please help my channel grow. I would really appreciate that. Keeps me engaged to make these videos. Thank you very much. All right, reason number 2B, I guess you could say, is the Florida Supreme Court. Now, why is this interesting? Well, obviously, I'm in Florida, so I find this highly interesting and exciting, actually, for us down here. The Florida Supreme Court issued an administrative order to judges. So basically, it said to all the chief judges across the civil courts across every county in Florida is that the warning was, not warning, it was an order that basically said, hey, Actively manage your civil cases and get them moving, streamline them, conclude litigation ASAP, streamline the process, prevent backlogs, okay? And well, again, why? Well, because I think they know what's going on here. This sort of, administrative order basically affects foreclosure and eviction cases. It actually affects them by pushing through the cases to reduce delays, to move, like not messing around, not taking up time, not having these things go on for years and years. They want these cases to move faster, push the cases through the system, even the cases impacted by whatever moratorium is out there. So whether it's an eviction moratorium or a CDC moratorium or a foreclosure moratorium, it's kind of like Supreme Court saying, you know what, we see that, but we're not really going to enforce that. We're going to enforce where we want our cases to go and how we want to process them through our own courts, okay? And also any future CFPB rulings. And what I mean by that is the fact that the CFPB has proposed things like, hey, we shouldn't do foreclosure processing until after end of 21 and things like that. So who knows what else will come down the way here. But the whole point is that you've got a state, court governing legal body basically telling all the county courts, all the civil courts across the entire state, saying, get your act together as well, too. So similar to the CFPB warning, they're saying to their judges, get your stuff in order, get your streamlined processes going. Things are, and why would they do that? Well, for me, I think it's yet another telltale sign, right? So once again here, it's starting May 28th, so this just happened. The case management orders will be issued. The order directs all judges to conclude litigation as soon as reasonably possible, and basically to control the progress of the cases until it's resolved. There was no exception for forbearance cases in the order. If you read further in this article, there's no same thing, even for the eviction stuff and the CDC moratoriums, whatever. They're just basically saying, process the stuff now. And, why would they do this? Well, Florida was one of the, biggest states that was hit during the last housing boom, bust, crash crisis. So once again, what does this tell us? It tells us that the Florida Supreme Court and the civil courts can see the backlog of cases that are sitting right now. So, we, get to see the forbearance numbers from a public perspective, but, if you do some investigation like I do, because I have access to some of this information, I know that there's a ton, there are thousands and thousands and thousands of, we'll call it, backlog foreclosure cases across the whole state. I mean, probably hundreds of thousands right now, okay? And they also know what the future volume is going to be. So I guess you could say that for all the cases that are stalled, backlogged, whatever, they've got a handle on that, and they're also probably extrapolating themselves, going, okay, if we do some basic math, we know that Florida, being X number of population, the third largest populated state in the nation, with X number of borrowers, and basically doing the numbers, they're going to see a surge in foreclosure cases being filed. So they don't want a repeat of that. Same thing, and I, heavily participated in the last housing crisis here, so I know what the courts were doing, what the cases are. I've been to the courthouse for clients on many occasions, dozens of occasions at the hearings, doing stuff I need to do to help, push things off for my clients and things like that. But they don't want to repeat, so things will start to move forward. So again, this is yet another debunking of the housing narrative. So if we're all talking about, hey, the forbearance people are just going to, go into loan mods or sell their homes, whatever. Well, I don't think everybody kind of believes that narrative. Another example that this is, this is a debunk of that. So Florida is preparing. The question will be, will other states adopt similar practices? Because there are other states out there that have a ton of backlog of foreclosure volume, like in New Jersey, like in New York, stuff like that. So we may see other states start to, I guess, implement or streamline their process. I'm going to tell you right now, part of the streamlined process, especially in Florida, is that, and let me backtrack once in a while here. You're going to hear a lot of other talking heads out there talk about, well, why foreclosures aren't going to be an issue, all right? It's because, well, the average time to foreclose, because we can see that chart on a quarterly basis supplied by Atom Data Solutions, they can say, well, the average time to foreclose is 834 days. What are the numbers going to be, okay? Yeah, that's historic, and that's sort of been up and down a little bit over the past little while, but what this means is the fact that we're not going to have 4 or 5 years of foreclosure time frame. It's going to be quicker and quicker and quicker. I can tell you, before the pandemic hit, I was looking at foreclosure cases in 2019. I was seeing many cases that would have a foreclosure filing and would go to sale within 6 months. So these 830-day deals, yeah, there are cases that actually, if you delay the case and fight the case and get the attorney and do your responses and participate, you can stretch it out. But for the majority of people, they don't do that. They don't do any defense, and the cases will move quickly. So that sort of cushion we used to have will not be there in the future, and I can tell you that because I was already seeing that before the pandemic hit. So that's kind of the scoop. So it's one more thing to tell us about what's going to happen in the future. Now, I didn't really get into this right now, but talking to the attorney firm that I work with, who does all of our short sale processing negotiations, and we've worked with for years. He's done over 5,000 of them. I've done about 500 of them, as well. We are also aware that the banks, lenders, and servicing companies have recently increased their BPO activity. Okay, so for those of you that don't know, what's a BPO? A BPO stands for broker price opinion. So typically what happens, there's a couple things happen. So when a mortgage is delinquent, when there's a non-payment of mortgage after 30 days, a lender, bank, or servicer may go to an asset management company and say, we want a BPO, we'd like to order a BPO on this property. So the asset management company has their list of realtors that have worked with them and applied, etc. And what they basically do is they send an order to an agent. Usually it's a real estate agent. It's not an appraisal here. This is not an appraisal. This is an opinion of value, broker price opinion. All right. So what happens? That agent will drive by the property, will take some exterior pictures. Chances are, if it's occupied, they're not going to get in, etc. And then they're going to go back to their home and they're going to figure out a value, and they're going to supply that value to the lender. They're also going to comment whether they think the property is vacant or occupied. So I guess you could say this is normal activity with respect to delinquent mortgages. Well, we know because we've heard through our grapevine and under our behind-the-scenes sources that, guess what? This activity has started to increase quickly over the past month or two. So it's going to be more. So as all these properties, these borrowers, these homes are coming out of the forbearance process, the BPO activities is coming up. So to me, that indicates that lenders are probably not as confident that all these forbearance people are just going to be able to resume normal monthly payments or sell their home or whatever. So you see that these are the behind the scenes information that nobody really talks about that we can get our hands on, and we know what's going to happen. So yet again, not a big reason, but just enough for me to go, I know, I see it happening. And as these things, again, it's not singular reason they're going to cause a housing crisis, but the cumulative, all these things are growing, they're increasing. The accumulation, or the culmination of the cumulative reasons will push us over the edge. So just something else to think about that adds fodder and kind of supports what I'm trying to say here. So that's kind of it for the second reason. My point to you guys, it's time. The end of forbearance is approaching, right? Foreclosure auctions are back on track. We're seeing them increase right now. Foreclosure filings and foreclosure starts are increasing. This is where to look for deals. More will be available than predicted. We're not seeing the true numbers, as I told you. Investors are already in pursuit of these. Why? Because I'll tell you the reason why, all right? Because look at the volume here, all right? This is the opportunity. There's two reasons why, okay? Black Knight talks about the 2 whatever million forbearance. Adam states 3 million plus. CNBC's talking 4. White House says about 10 million. I'm thinking 5 to 6.5 conservatively. Other people are predicting 10 to 11 million foreclosures out there. Small landlords are the wild card amount because we don't know how many are going to hit them. So that's the point. So there's going to be a volume here that's not being talked about or being avoided or being under a housing narrative. And whoops, sorry, let me go back over here. Maybe I didn't do that. Okay. So I'm talking Florida's a place to buy and invest. Why is that? Well, very clearly, if we go to the next slide here, is look at this. This is the discount portion of a short sale. So the median home price was $300,000 back in March for my Tampa, Clearwater, St. Petersburg MSA. The difference, for a median price for short sale was $190. It's about $110 in equity, but a 37% discount. So when you take a look at the distressed property situation, this is where you want to buy. This is where you want to buy your primary home. This is one you want to invest, etc. So that's why Florida is a great place for real estate, because we have a growing population. We have places to grow and to move. We have high level of distress, high level of defaults, and we have the difference in price point here when you get your hands on this type of stuff. And we have a state system, I guess you say foreclosure policy system that actually works in our favor, which is great, gives us more time to process stuff. So the whole point is you should be looking at this stuff right now. That's why I say, hey guys, you know what? You need to take a bit of time and spend some time with me on the phone. We could talk about this, but that's where the opportunity is going to be. So I've got my short sale cash connection, my premier short sale course, which is what you should take a look at. If that's not for you, I've got my other course, which is Zombie Foreclosure Flip, which we talk about distressed property, saving money, getting deals. And this is getting ahead of all the other buyers out there and doing things that they won't do Your real estate agent won't do this for you. You got to take control yourself, okay? Anyway, I'll tell you how to engage the distressed housing market. Just connect with me, send me an email with your information, your phone number. We'll go from there. So once again, and also, oh, by the way, gethousingdata.com, gethousingdata.com. If you want to know anywhere in the country what's going on in your area, your neck of the woods with respect to distressed property listings, go to that website, sign up, you get a 7-day free trial. But other than that, it's a very inexpensive tool that shows you what's happening in your market, pre-foreclosures, foreclosure auctions, third-party auctions, probates, other distressed sales, the whole bit. It's going to be there. It gives you a good test, a good litmus, a good sort of pulse of what's happening in your location. All right, guys, reach out to me. Thanks for the views, likes, comments. Please subscribe if you're not a subscriber. Share the video with your family and friends. In a couple days, we'll get to the #1 reasons on our top 10 reasons why we're going to have a real estate crash and crisis. Thank you.